Hey guys, and welcome to today's video. So in today's video, I'm going to be discussing liquidity purge and revert. So how you can actually use this as a particular strategy to profit in the forex financial market. So without further ado, let's get right into it. So you can see right here on the screen, we have already a markup right here, and this is on the USD card on the 4 hours. So one thing I want you to pay attention to is the areas marked up. So first of all, we had a break of structure right here because price rallied all the way from this low. The first push was here, price retraced and rallied again, creating a break of structure on this ultimate previous swing here to the sell side. So all of a sudden, we saw price started rejecting at this zone and price started dropping. So at this area, we would have expected for price to actually hold up at this particular region right there, because this will act as an area of liquidity. Mind you, for those of you following the content, you can watch the previous video where I spoke about market structure and liquidity. And so you could have a retest around the zone, but you can see the moment price dropped to that particular zone right there, you can see we started having somewhat of a kind of rejection on this particular candle, signifying that okay, there were people still willing to see price go higher at this particular region. So what price had to do, price had to mitigate those first take those positions. You can see the buy at this candle canceled that buy because price already has an objective. Mind you, I said earlier in those videos, I said in the market structure and liquidity video, I said price are predetermined. They're already factored in. Those prices where you see the candlesticks which were already predetermined in the forex financial market. So you can see price tapped into this particular zone right there. Let me use the crosshair for clarity. Price tapped into this particular zone, which is an area of liquidity, is previous highs now acting as an area of support. You can see on this particular candle there was a rejection, and all of a sudden price came lower, canceling that area right there. So this starts signifying to us that there could be sellers in the market right here. So all of a sudden price jumped up, canceling that particular liquidity at that area, which becomes a liquidity grab. All of a sudden we started seeing price drop aggressively. So at the formation of this particular candle, this will signify, for those of you that want to join the trend, that's the current trend, you could actually start looking for sell opportunities around this particular area. But I'm not going to go into details of that because that's not the focus of this video. So you could actually start looking to see sell opportunities at this particular candle. You can see what happened eventually. Price dropped all the way to this particular low, and after that you can see the revert all the way to the buy side. But the question is, how could you anticipate this particular purge and revert strategy, a liquidity purge and revert strategy? The first thing I want you to understand is that you want to understand the overall trend. You want to understand the trend, where the trend is coming from. And one thing you want to focus on is the point of origin. Here is the point of origin. This is where the whole buy trend started right here, even from the 4 hours. So the whole buy trend started from this zone right here. Price pushed up, price came down again, retraced into an area of inefficiency right here. Price gapped up again, rallied all the way again, retraced again into this other block right here, also probably an area of inefficiency on the lower time frame, and price started dwindling around this region, rallied again, dwindled, retrace, rally again, breaking that previous high, which confirmed okay, our buy trend is actually strong right here. So price showed no willingness to keep pushing for higher liquidity. Why? Because there were liquidity right here predetermined in price. So hence you can now see why price pushed down to the lower to the sell side for what? A liquidity purge. Now if you drop down to the hourly charts, you're going to understand why it is actually a liquidity purge right here. If you look at the hourly chart, if I bring the period separator, you can see mind you, when we talk about liquidity, we're simply referring to previous lows or previous highs or previous series of highs or previous series of lows, also being double tops and double bottom. So you can see that this is a previous day low and this is also a previous day low. So here also is also a previous day low. So you can see the moment price broke this particular low, price has failed to take out any particular high. But mind you, we have a point of origin here, signifying that we are currently in a buy trend, and we have seen price broke many structures to the buy side, confirming our bullish trend. So we are rest assured that we're actually in bullish trend. So that's one thing you want to be you want to verify. You want to be sure that okay, we're actually in a bullish trend. And for those of you wondering why I'm also that sure we're in a bullish trend, you can also see from the daily charts. Mind you, I said in most of my videos, I said start your analysis from the daily time frame. So which is the banking time frame. This is where the banks start their own analysis. So you can see that we had a push here on the daily time frame, price retrace, price broke structure. So that break of structure you were seeing on the 1 hour is actually clear here on the daily time frame. So you can see that break of structure right here. So you can see even from the daily perspective, we are in a bullish trend. So dropping down back to the 1 hour, let's confirm, see more details in price. So um sorry about that. So you can see price started dwindling around this zone. Why was it dwindling? Because there were reasons why price want to push up at this zone, because people were willing to keep buying at this zone. People had orders right here. So they were, you can see the whole consolidation that happened on this particular day. Why? Because they were trying to transact, take in the orders that people have, mitigate those orders, cancel out liquidity, grab some liquidity, reach for some liquidity, and eventually take one particular direction. And the direction they took is actually the sell side. Why? Because they want to push out all this liquidity. There were a lot of people contending for a spot at the table. You know, say a lot of people wanted to have a chance to eat on the table. So the market will always do what it wants to do. And the main thing the market is after is liquidity. It is after money. It needs money to move. It needs to knock out some people to be able to move. And that is what it's going to look for. You get, so being a smart money trader is being able to understand, okay, I don't want to be among the fishes that the shark is going to eat. Whatever you get now. So what you can see right here is price. Okay, a lot of people wanted a seat at the table right here at this particular zone. You can see how they came to this zone. Price rejected and price rallied, giving them an idea. Okay, we are supporting your sentiment. What happened? Knock them out. We don't want you to eat with us on the table. I don't get it now. What again? Price engineered under liquidity to the buy side. So at this zone, a lot of people will be like, wow, 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 let's join in. We're right at the first instance. What again? They grabbed the other liquidity of those people selling right here and rejected, canceling out these sales, those that were buying here already. In other words, we don't want any sellers, we don't want any buyers on the table. We are going to move price the way we want to move it. I don't get it now. And hence, those that were also buying at this zone and those that were also buying at this zone, they also didn't want them at the table. So what happened? Price pushed all the liquidity all the way to the sell side, canceling out all the people that were actually buying earlier on this particular bullish rally here. And some people could see this particular move right here and count it a break of structure to the sell side and start looking for sell opportunities. But when you already understand, okay, we have a point of origin right here, signifying this is the point of origin. For those of you wondering, we already have a point of origin here signifying that we are in a bullish trend, and we can confirm that from the daily time frame. You don't want to be looking for reasons to keep going lower at this particular break of structure. What you want to look for is a reason to keep going higher. So how do you start looking for reasons to go higher? You can drop down to the lower time frame and observe price right there. So if you look at this particular zone in price here, you can see that we have an institutional market structure shift. So price rallied a minimal right there. We have a high that was formed right there. You can see that particular high right there. And all of a sudden, you can see this bullish candle came all the way to that high, cancel that high, giving us what we know as the W pattern. Mind you, I spoke about this W pattern in the um, advanced market structure forex strategy. So for those of you wondering about it, you can watch that video right there. So that's the W pattern right there. So if I push this, sorry, let me mark this properly. So let me zoom that in properly right there. So W there. So you can see the W pattern right here. This is W. This is the W pattern right there. So we have the W pattern. You can see our price move up. So at this, let's say you are not comfortable at entering here, this particular zone right here would have been your entry. So you would have put your stops below this low and you could enjoy the whole rally to the buy side right there. Let's say you could not spot this particular W pattern and you still want to get in on the trend. You still want to join this whole bullish revert to the buy side. There's another strategy you can actually apply. This is a previous day low, so you could draw that out in time actually at that zone right there and drop down to a much more lower time frame. Because if you watch right here on the 15 minutes, you can see with the moment price gets to that, so you can see we had a reaction in price, more like a doji candle, more like here it is more like a rejection at that particular zone. So if you drop down to the 55 minutes, you could actually see a setup at that zone. So if I zoom that in properly right there, so you can see that when once price tapped that zone, you can see the rejection all of a sudden price, because of we are already in a revert level, we're already in a revert zone rather. You can see the reason why price pushed higher. So this could be your entry. So you could enter here on the 5 minutes, put your stops, sorry, put your tight stops below this particular low. That's 140 pips, and ride the remaining trend all the way to that particular high, which is 972 pips. So if you are still continue, you probably would have entered 1000, and that'll be giving you almost a 1 to 8 risk to reward ratio. So that is it for this particular video on the liquidity purge and revert strategy. So I believe you found value in today's video. If you do, hit the like button, hit the subscribe button, and see you in more videos.